Hello terrestrial everyone, my name is Gregor and welcome to our new video surfing the Elliott waves where I'll look at some of the most interesting and important updates for this week. This video has been brought to you by Orbex. I will look at German DAX, crude oil, CAD yen, dollar yen, Kiwi and Euro versus Kiwi. Now, US stock market has closed bearish last week, but somehow the European markets are still doing very well. So it appears like this consolidation that the market is forming currently still above this trend line, it means that maybe there is room for more upside. So when I look at these substructures, yes, there is a fifth wave up. So sooner or later, maybe this wave one will come to an end. But as long as the market is trading above this trend line and with this current corrective price action on a smaller time frame, I think that there is room for more gains. Looking at this substructure on the 4-hour chart, so I came out with an idea that this was actually small wave 1 and wave 2 and then a very nice and extended wave 3, and now we had wave 4 pullback and expecting a new high for 2023 to make wave 5 of 5. So as long as the market is trading above this previous swing high, which actually reacted as a support 3 times here around 15,260, I think that there is chance for more gains. So watch out for this push to new highs, especially if this channel resistance line can be broken. Now looking at the crude oil, crude oil is still forming potential bearish formation because we are seeing prices in a triangle. Very important big level would be around $60 per barrel for this year on crude oil, which could easily come in play if this trend line will be broken on the lower side of this contracting range. The February 13th also was important for crude oil. We have seen a very nice sell-off, more than 80% to the recent swing lows after the Biden administration said that they are planning to sell their oil reserves. Okay, so I think that this could potentially see and cause more weakness here on crude oil. And looking at the 4-hour chart, well, that appears to be like a very nice triangle, and potentially we have this wave 2 rally going on. So if we can drop below this trend line support, then I think that very sharp wave 3 fall could actually occur. And on the other hand, this, as you know, could have some very bearish implications for commodity currencies like CAD or NOK, for example. Now, I will look actually at CAD yen. And why the CAD yen? Because I think the dollar yen is moving into some resistance, and also inflation in Canada is coming to the downside. We have Bank of Canada who said that they are ready to stop with hiking rates, and all of this suggests that maybe CAD is going to see more weakness. In fact, inflation in Japan, on the other hand, is still moving higher. So maybe there will be some speculations that Bank of Japan should be more hawkish, and this could make a perfect bearish case for CAD yen. Looking at this price action from an Elliott wave perspective, we have very nice wave 1, wave 2, an extended very strong wave 3 right into this 261.8% extension. Nice fib target for a wave 3, which is actually the extension of wave 1 measured from end of a wave 2. Now you have a wave 4 pullback. Normally wave 4 pullback will be the 38.2% retracement of wave 3, and then you will see that wave 2 can be equal to wave 2, and that comes all around this area here. Okay, so I think that there can be a chance for a very nice turnaround. Looking at the 4-hour chart to give you some updates on the subdivisions, well, we have potentially 3 waves up with an extended 5 subwaves within wave C, so there can be more weakness coming. So far we predicted very nice, this reversal is so far happening, but very strong confirmation would be a broken channel support and of course an overlap with this wave A here around 97.85. So this overlap and break below the trend line even earlier would give us a lot of evidence to say that we are back in bearish mode here, ready to attack these levels on CAD yen around 94.95. Looking at dollar yen, since we mentioned CAD yen, because we know that those crosses are correlated to dollar yen very tightly. So looking firstly from Elliott wave perspective, I see this drop from 2022 highs as an impulse, and you are now in a corrective rise. Now this corrective rise already retraced very nicely for 38.2%, and very similar bounce was compared to the left shoulder. So you are at very nice technical resistance. However, I think that there is room still for 138, and the reason why I could be looking for 138 is because looking at the yen futures here, there was a very nice and strong gap here back in December 15, as you can see it here. Okay, so this gap actually occurred after a new contract, after a rollover into a new contract. So before the one contract expiration, you will see typically a very strong momentum and volume because there will be a new position adjustment. And then you will see potentially also at the start of obviously of a new trading contract in the first few days, also interesting new potential volumes because of new positions. So this whole area, okay, seems to be very important, and I would not be surprised if we see a price retracement back all the way towards these levels before this market again tries to stabilize the Japanese yen. So overall, I think that dollar yen could be moving into the resistance, Japanese yen into the support. Not really sure if that's already happening right now or we have here more weakness for Japanese yen, but overall this makes whenever these reversals will happen to the downside on here on dollar yen, I think that that's when CAD yen could see a big hit to the downside. Now also looking at Kiwi has a very nice pattern. This was clearly a 5-way movement to the upside, and then we tracked since start of the year. Actually, we've been tracking this ABC flat correction. We repeated here a few times that that's probably just a temporary move to a new high, and that price can reverse all the way back to the January levels. Okay, because normally when you see the starting point at the start of the year, actually, I should say, at the start of the new year, very strong and massive move in one direction. Keep in mind that this bull run may not continue just for the whole year. So sooner or later, I think, especially if the early flows were very strong, so sooner or later the market can reverse that flows before the pair or any market can find the real direction. So in my opinion, this was a beautiful example, very nice retracement, clear out probably some stops that were long earlier this year, and now the market is trying to clear them out. Also, there were probably a lot of new short orders that were expecting a sell-off here, and notice what happens, the market does the opposite. So now when we have both of the markets out, both of the sides, longs and shorts were reduced, I think that there is actually a chance for this market to recover, especially since I think that this flat correction can be finished. We already see this broken trend line, so maybe watch out for the weekly close, and then buy pullbacks could make sense here if we, of course, will stay above that recent lows by the end of the week. Now let's take a look also on Kiwi, since we mentioned strong New Zealand dollar versus the US dollar, even versus euro. Is we have a very nice, beautiful structure. Looking at the subdivisions here, just from those December lows, that was a very strong push to the upside. It was wave A. Okay, then we have a wave B pullback, and looks like that this higher prices later on was an ending diagonal. So yes, we had the higher highs and higher swing lows, but notice that there was actually an overlapping price action. So market was not that strong compared to the first leg. So that was wave C, and that was a very strong wave A. So momentum clearly, if you look at blue lines now, was decreasing, and I'm not surprised that market is reversing very sharply to the downside. So far we are seeing that this trendline support can be broken, and usually when wedge formation is completed, you can see a retracement all the way back to the starting point of the wedge, which in our case is here. That goes to back to January lows of this year. So I think there is a chance for more weakness. Either we see some support and short-term rally from that trend line, or after that trend line, and then the same trend line could act as a resistance. So as long as the market is trading below that recent highs, I think that more weakness here could be seen. Traders, thank you very much for your attention. I hope that you enjoyed this video, and again, talk to you soon. Bye.